Okay, good morning, everyone. Trust we are doing good. If you can hear me, please use the chat box. Just drop a message in the chat box. If you've got questions, please use the question sections and drop your questions. And if I drop a poll, please let's respond to it using the poll section. I'm your host, Akinwale Chibuike, and I've brought to you guys another edition of the technical analysis series. Like I told you guys, being majorly things based on technical analysis, which is actually the way and method of buying and selling in the financial market. So, if you were on the last session that we had, drop something in the chat box. Let's just make the chat lively. Let's do what to converse in the chat box. And also, if you were not on the last webinar, please drop something also in the chat box so I can know those that missed out and those that didn't. So I can quickly do a review or an overview of what we had the last time. Okay, so um the last time we spoke about technical analysis and we talked majorly about the difference between technical analysis and fundamental analysis. Then we actually delved into a major aspect of technical analysis, which was market structure generally and support and resistance. We talked about market structures, support and resistance. We identified them on the chart, how it is supposed to be on the chart. We identified them there, and everybody did go home with a lot of new things they learned. And also, I gave an assignment to everybody who were on the call that day. If you were on the call that day, you've not done the assignment I gave, try as much as possible to do it. Okay, try as much as possible to do it to help you build your skill, create this familiarization with the charts. Okay, to help you have the knowledge or the concept of how these things form on the chart, just a regular breakthrough or connection with the charts. Okay, so that's what it would actually help you do. So if you didn't do the assignment, you could go and do it and drop it in my WhatsApp inbox today. Okay, today, so I could actually call you and give you more insight into it. Yeah, good morning, Chiefs. Good morning, Samuel. It's a lovely morning here in Lagos. A lovely morning. Okay, so today we'll be talking about technical analysis 2.0, just a few other topics on the technical analysis. So let me share my screen. Okay, in a minute. I'll be sharing my screen in a minute. So let's do what to just hold on to that. Slides and yeah, technical analysis 2.0. 2.0. Okay, so in a few minutes now, I'll be sharing my screen. Okay, okay. Sorry about that. Okay, in a minute, I'll share my screen now. In a minute, just a few minutes. Okay, great. If you can't see my screen, please do drop something in the chat box. And if you can't see my screen, drop something in the chat box. Please let me know if you can see my screen or if you can't. Okay, so I can actually figure out what's wrong. Can you see my screen? Can you see my screen? Yes or no? Good morning, Ayadeji. Good morning. Okay, can you see my screen now? I'm trying to actually put it up. Okay, yes. Can you see my screen? If you can see my screen, do say something in the chat box. Thank you. If you can see my screen, do drop something in the chat box. Okay, great, great, great. So before we begin, let me just run a quick poll with you guys, okay? The new poll would be something based on the last class. If you attended the last class or you watched the replay on YouTube or you watched the replay using Livestorm, please respond to the post, okay? Okay, so I just sent out a poll. Were you able to apply the things you learned in the last session when trading? Were you able to apply the things you learned in the last session when trading? Were you able to apply them when trading? Like, that's the major thing. It's not just coming to my classes and not being able to apply or identify these things on the chart. So please respond to the post. Thank you. Please respond to the post. Thank you. Were you able to apply all the things you learned in the last session when trading? Were you able to apply them when trading? Yeah, just respond to the post. No need to write yes, okay? Just respond to the poll. Just click on yes on the poll or no on the poll, okay? So the next one goes this. The next part, I just want us to run 3 polls at first before we dive right into class. So I'm sending out another poll, but before you where I'm sending, remember the last time we talked about okay, I'm very, very sorry about the break in connection. Very, very sorry about that. So I'm sharing my screen. And also the second poll I sent, it says, were you able to apply the things you learned in the webinar in the last session when you were trading? Everybody responded yes, that's great. Now, did you see those concepts I explained play out over and over again? You remember the last time I told you guys to go back into your previous chart, like go back to the left hand side, not the right hand side where price is printing. Go back to the left hand side and see how these things form over and over, the higher highs and the higher lows, the lower lows and the lower highs. You know, I told you guys to go back and check and see these things form over and over and over again. Did you see them form? Did you see them form? Yes or no? Did you see the higher highs and the higher lows form? Did you see the lower highs and the lower low form? Do you see how price reversed? Because I taught you guys this thing to go and figure, or to go and see them happen on the charts. Did you see them happen? Brilliant, brilliant. So that shows that we are on the right track, like we're on the right track with this webinar. So let me move to what we'll be doing today. Yes, everybody's giving a positive response. That's brilliant. Somebody even sent me he truly took using those concepts and he made a lot of money from it. I think I posted it on my WhatsApp status. Yeah, I posted it on my WhatsApp status. If you haven't checked my WhatsApp status, go and check my WhatsApp status, because I posted I will be looking at shorting opportunities on EURGBP. Okay, I'll be looking for shorting opportunities. It's not a trade signal, it's just a trade idea. I said I'll be looking for shorting opportunities on EURGBP. It's on my status also. Go and check it out. So, to what we'll be doing today. What we'll be doing today is very, very simple. In this session, we'll be talking about channels and trend lines, breakouts and fake breakouts, chart patterns. Those are the things we'll be talking about. Channels and trend lines, breakouts and fake breakouts, chart patterns. Okay, so I want everybody to get a piece of paper, take notes, because this class is going to be amazing. It's going to be mind-blowing. Let's just put it that way. Now, let's start off with channels and trend lines. Okay, let's start off with channels and trend lines. Now, it's from your end, Glory. Please, it's from your end. Please, it's from your end. Try as much as possible to get an headphone or a hands-free to use so you can hear me clearly. Now, just a brief introduction. Channels and trend lines, they act as dynamic support and resistance. Okay, remember the other time we said there is support and resistance. Now, there's something called dynamic support and resistance. We'll see it on the chart clearly. Okay, now they act as dynamic support and resistance. When a trend line is below price, we call it a supporting trend line. When a trend line is above price, we call it a resisting trend line. And when a trend line is above and below price, we call it a price channel. So let me show you guys just from my screen right here. From my screen right here, you can see this is a channel. This is a rising trend line, a supporting trend line, and this is a resisting trend line. So let's go and see this on the chart. Let's go and see this on the chart. So let me just pull up a blank chart so we can use that to work. I'm coming and loading the chart. It's showing loading streamers. Okay, a few minutes it should pop up, or it should be your internet connection. Yes, it should be your internet connection. Just wait a few while or disconnect and connect again to the meeting. It should put you on track. Okay, so yeah, let me just get a blank chart. I haven't done anything on yet. Oh, my chart is actually marked up. Wow. Okay, a minute. Blank chart. Okay, yes, we found one. I'll be sharing my screen for everybody to see the charts now. Okay. Okay, so let's share another screen. Can you see a blank chart? If you can see a blank chart with a cross cursor rolling on it, please say something in the chat box, okay? If you can see a blank chart with a cross cursor rolling on it, please drop something in the chat box. Or if you can see me write W, if you can see a WV on the chart, or you can see a EGM on the chart, please say something in the chat box, okay? I need to know if you're seeing what I'm saying. EGM. Can you see an EGM on the chart? Okay, great. So yeah, let's dive right into it. Now, as you all know, I would explain with live terms. Like using live terms, very, very interesting to explain with. So that's what I'll be explaining with. Now let's delete this. Okay, let's say this is okay. We have a classroom. Okay, we have the classroom. Then this is a boy. This is a boy. And this is another boy. Okay. Then this is one boy again. Okay, let's put it this way. We have 4 boys in the classroom. And they were making noise. Then the teacher came into the class and said, You guys should stop making noise unless I will spank you. Then the teacher left and they continued making noise. Then the teacher came back into the class and he was already stressed out but wanted to spank them because they disobeyed his rules. And he didn't want to stress himself in spanking them. You know, if he spanks like this, he would have to go to this person first, spank the person, this person first, spank the person, this person next, spank the person, and this person next, spank the person, right? It's great to have you on here, Ifunaya, okay? It's great to have you on here. So instead of going to them one by one to spank them, he decided to get a long cane and what spank everybody at once. So this is what he did. He told them to stay in this format. He told them to stay in this format so he could spank them properly. He told them to stay in this format so he could spank them properly. So I'm coming, let me just draw out the format. So he told them to stay in this format so he could spank them properly. Okay, yes. So he told them to stay in this format so he could spank them properly. Then he took his long cane and did the cane like this. So from this diagram, if he decides to beat one person, the cane would meet the rest, right? Yes or no? Yes or no? Yes or no? Okay. If he decides to spank one person, the cane will meet the rest, right? Brilliant. Now, this is a what? A trend line. Take the line as a trend line, then take those boxes as price. Now, look at it. Every single time price came into the trend line, what happened? It dropped down, right? Look at it closely. It dropped down, right? It came into it again. Let me go to the charts, okay? Price came into this trend line, yeah? What happened? It dropped down. It came into it again, it dropped down, came into it again, dropped down, came into it again, dropped down. Did you understand the little scenario I used to explain it? The class scenario I used to explain it. Is it clear? Brilliant. Now, what will we call this type of trend line? Will you call it a supporting trend line or a resisting trend line? Great. Resisting trend line. That's brilliant. That's very, very, very brilliant. Resisting trend line. Because every single time the teacher spanked somebody, it went down, right? It went down. Every single time the teacher spanked somebody, it went down. And that is just resisting trend line in one explanation. Is it clear? I want everybody to understand this. That's why I'm using life examples. I've always been using life examples in my explanation. Brilliant. Now, instead of wasting time to draw the supporting trend line, I will just flip my chart, like invert the scale. And yes, we have the what? The one for the supporting trend line. So the same scenario. The teacher told them to not go the other way, but go this way. So he stands here and spanks everybody. Then they keep going to the front. Do we understand? Do we understand? Is it clear now? If you've got questions, please ask questions. Exactly, this is a what? A supporting trend line, right? This is a supporting trend line. We can see how easy it is to understand. So let's now say the teacher is a very, very is a disciplinarian. Okay, it's a disciplinarian, and he hates when kids disobey him. So whenever he wants to spank, he gets other teachers to assist him. Now, this is the teacher on this side of the class, ready to spank everybody. Then he got another teacher also to spank them this way. Now, I want everybody to listen closely now. Listen closely. Every time price came into this upper part of the teacher, what happens? He sends them to where? He sends them to the other teacher, right? Yes or no? Every time they move, okay, let me delete this. Let me delete this. Let me delete this. Okay, delete. Now watch what I'm drawing. Every time this teacher flogs this one, he runs to this teacher. Then this teacher sends him back to this one, flogs him, runs into this teacher, flogs, 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 runs into this teacher, then back to him. Now, every single time they go to the other teacher, what happens? He spanks them and returns them back to the other teacher, which is what? This is acting as a what? A resistance or a dynamic resistance. Yes, a dynamic resistance. Like I said, trend lines act as dynamic resistance. So this is what? Dynamic resistance. Let me just show this to you. The center and make it very, very big so everybody can see. Then if this is a dynamic resistance, this will become a what? A dynamic support. Do we understand? Do we understand the concepts behind trend lines first? The concepts behind trend lines first. Dynamic support, it acts as dynamic support and acts as dynamic resistance. So you see now, when the dynamic support and dynamic resistance comes together, they form a what? They form a channel, right? Look at it. Price is trading, or the students are moving in a certain path. That is what we call a channel. So this is price and it's moving in a certain path. So this is what? A channel. Do we understand? Do we understand that? Do we understand that? I'll be needing more responses, okay? Do we understand? Great. Okay, so now there are three types of channels. Okay? There are three types of channel. We have the up channel or the upward channel, which is this one we are seeing right here. Okay? And what does the upward channel tells us? It tells us how price behaves. Or the reason why price is moving in a certain direction to the upside. That is what it tells us. So it consists of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Remember, we've talked about these things, right? So you know that when price is moving in a channel or in an up channel, you see higher highs and higher lows, higher highs and higher lows. Now, when we are moving in a down channel, let me just throw this to the downside. When we are in a down channel, support. Okay. Okay. Okay, good. Now, when we are in a down channel, we see series of what? Lower lows and lower highs, 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 where the line below acts as the dynamic support and the trend line above acts as the dynamic resistance. Do we all understand before we go to the charts? Do we all understand before we go to the charts? Now, I said there are three types of channel. We said the upward channel, the downward channel, which is this one. Then we have the sideways channel. The sideways channel. Now, the sideways channel is like, or is the ranging market, okay? The ranging market, the ranging trend we talked about the last time. So this is what a sideways channel look like. This is what a sideways channel looks like. So this is just when the teacher spanks them on a straight line. He goes to this person first, spanks, comes down, beats this person, spanks, 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 spanks. So it only consists of what? Highs and lows, highs and lows, highs, lows, highs, low, high, low, and high. So do we all understand the concept behind channels and trend lines now before we go to the charts to take examples? Do we all understand it before we go to the chart to take examples? Yes or no? Okay, great, great. Now, let's see examples on a real life chart. So, remember last time when we were talking, I said whatever we draw as a diagram, it will never be picture perfect on the chart. Okay, so don't expect to see a picture perfect trend. Don't expect to see a picture perfect channel. Don't expect to see a picture perfect trend line. Don't expect to see a picture perfect sideways channel. Okay, so let's take this first. This is a sideways channel right here. This is a sideways channel right here. Can we all see it? Can we all see it? It has a low, a high. The teacher runs from here to here to here, then here, then here, then here. Did you see? Low, high, low, high, low, high. Do we all understand that? Do we all understand that? Okay, great. So let's move to explaining trend lines now. Okay, so let me just delete this and delete this. Now, this is a what? What type of trend line is this? What type of trend line is this? Downward trend line. Yes, downward trend line. Resisting trend line, right? Because every time price came into it, it resisted and pushed to the downside. Or we can see every time price came into it, it resisted and went down. So it's either called a downward trend line, a resisting trend line, whatever it is you call it, it is what it is. Okay. So knowing that this is a downward trend line, what are we looking for now? We are looking for an upward trend line. So can draw this out right here. This is an upward trend line. We can also see this is an upward trend line. So this is an upward trend line. We can say this is an upward trend line also, right? The one I just drew now, it's an upward trend line, right? Every time price came into it, it went up. Every time price came into it, it went up. Every time price came into it, it went up. Every time price came into it, it went up. So it's an upward trend line or a supporting trend line. Are we clear on that? Are we clear on that? If we are clear on it, please drop something in the chat box. Thank you. Okay, great. So I can delete everything. Now, let's look for channels. I can draw out a channel from this. I can draw this as the what? The supporting trend line. Then I can draw out this. Can we see it's a channel? Price went up, rejected, came down, went up before it broke out. Can we all see it clearly that that's a channel? Yes, brilliant. So we'll still talk about how to treat channels, trend lines, and also a sideways channel. But do we have any questions before I go to the next thing? Do we have any questions? Do we all understand the concept behind channels and trend lines? Do we? Okay, great. That's great. So let's go to the next thing. Let me stop sharing my screen. And let's go to the next thing on the slide. The next thing on the slide is breakouts and false breakouts. Okay, breakouts and false breakouts. Now, what is a breakout? A breakout is a price movement above or below a period trading area. Okay, a breakout is a price movement above or below a period trading area. Now, the underlying concept is that the ability for price to move beyond a period trading area or structure indicates a potential trend in the direction of the breakout. When a breakout happens, it means there is a new trend forming. That's just the simple thing. When a breakout happens, it means a new trend is forming. So a breakout is a price movement above or below a period trading area. The underlying concept is that the ability for price to move beyond a period trading area or structure, which indicates a potential trend in direction of the breakout. Now, let me explain this concept using the teacher and the student scenario once again. Now, remember we said they were told to line up in a certain direction. So let me just use this. So let's say the teacher told them to line up this way. And he was ready to flog them. Okay. So let's say the teacher told them to line up this way and he was ready to flog them with his cane. So this black line is the cane. Okay. So he started flogging from here, flog this one, flog this one, flog this one. Then when he was about to come and flog this one, we had something like this. Oh, I can't. Okay, let me use this. Let's take it from the top again. So the teacher wanted to flog them, so we had them lined up like this. Flogged, flogged, then flogged. Then all of a sudden we had this guy who doesn't want to get flogged. Okay, now simple logic. We flogged this person, then flogged this person, then flogged this person. Then all of a sudden, this guy doesn't want to get flogged. Then he runs away from the king. This is a simple example of a breakout. So the 4 students, 1, 2, 3, 4. Then this one doesn't want to get flogged. Then he runs away from the king. When he runs away from the king, the teacher can't flog him anymore. So it means he's going to be pardoned. Let's put it that way. He's going to be pardoned because of he ran away from being flogged. And that's the same concept when it comes to a breakout. When a breakout happens, it changes the direction of price. Price is going to the upside. Price is going to the upside. Then all of a sudden we broke out. Breaking out, we came back for a retest or a retracement. Then we started going to the downside. Do we understand? Do we understand? Oh, you can't see my screen. I'm very, very sorry. Very, very sorry about that. Okay, let me share my screen again. So let's take it from the top. There are 4 students, and we've got the students right here. So we've got this student. He was flogged. Okay, he was flogged, and he's above this area right here. Then we've got this one also, was flogged, and he's above this area right here. He's not breaking the line. Then we also have this one, flogged. He's still above that area. Then there's one student that doesn't want to get flogged. Then when it was his turn, he did this. Then he decided to influence other students also. Then he decided to influence other students also. Now, this is a simple example of a breakout. So they flogged this person, flogged this person, flogged. Then he got his own turn. He didn't want to get flogged. He ran away from being flogged. So running away, he influenced other students, and other students also, they don't want to get flogged. And they start going, or they start running away from the teacher. they start running away from the teacher instead of running in alignment with the teacher. Do we all understand that? Yes, yes, yes. It does mean it's the same thing, Augustine, because they are still going against the trend direction. But retest means more of testing a structure, the previous structure that it has broke. But retracement could be covering up for an impulsive move. Okay? So do we all understand the concept now of breakouts? Because the students ran away. Okay, good. So now, if we want to explain for the so now if we want to explain the breakout to the upside, let me just invert my chart. Then this is the breakout to the upside. Remember, that was a breakout to the downside. Now the students were being flogged. Then this one decided, I don't want to be flogged. I don't deserve to be flogged. Then decided to run away by breaking out and running away from the teacher and influencing other students to run away from the teacher. Do we all understand now? And also there's a sideways breakout. As there's a sideways channel, there's a sideways breakout. This is how a sideways breakout looks like. This is how it looks like. Okay. So I'll just use this tool to do the sideways breakout. So let's see it better. Then they were flogging everybody. Everybody was enjoying the beating. Then all of a sudden, one student became a rebel and said he's not going to get flogged. Then all of a sudden, he influenced other students, and they all started running away from the teachers. They all started running away from the teacher. So this is what the sideways one looks like. Do we all understand? Do we all understand now? Great. Okay, so let's go and see this on a chart. Let's go and see this on a chart. So I'll be deleting this and showing a chart. Now, looking for an example we can use. Okay, so let's start with the down one, or the downtrend. Now look at this. Okay, a minute, let me just draw this properly. Okay, so what do you see? What do you see? What do you see on this? What do you see? Tell me, somebody explain. Yes, they all mean the same thing, but Augustine, I answered your question previously. They all mean the same thing: retesting, retracement, price correction. They all mean the same thing, but where they are used, like the scenarios they are being used, are different. I would explain that to you after the session. Okay, I will do a short something for you after the session. Just drop this question under the question section so I can remember. Okay, so we are in a downtrend, right? And what happened? They broke out to the upside. So every single time the students, they were here until one said, no, I'm not going to get beaten. Then he runs away to the upside, then comes back to influence more people. Then he started going to the upside. Do you see? You can see it clearly now, right? Exactly. Sawyer is right on track. Sawyer has been doing quite well. Yeah, so can you hear me now? I'm still waiting for more responses on what is on the screen. Does everybody understand what is on the screen now? Okay, great. Okay, great. So let's go and look for an uptrend. So I want you guys to keep an eye out for an uptrend, okay? Just tell me when you see one, okay? Let me know when you see an uptrend. So let me just stop sharing. Let me share another screen. Okay, I want to share another screen. Okay, I'm sharing another screen now. Can you see my screen? If you can see my screen, please do drop something in the chat box if you can see my screen. Drop something in the chat box if you can see my screen. Okay, good. So, can we all see the uptrend right here? So let me just can we all see the uptrend right there? Yes, we can all see the uptrend right there. That's brilliant. Now, you see, everybody was getting beaten, then somebody said, no, I don't want to get beaten. Then all of a sudden, he runs away, influences more people, then starts taking them to the downside. Okay, so we can see it clearly, right? Now, I will make reference to this analysis you're seeing right on this side of the screen. Now, if you were on the previous class, you would understand this thing you're seeing here. You would understand everything on this chart right here. If you were on the previous class, you would understand this. Am I wrong or am I right? All those lines or all those boxes you see, what do they mean? They mean support and what? Resistance, right? Every single area of support and resistance. And remember, we said support can turn to resistance and resistance can turn to support. So look right here. What happened right here? Support, price came back into it, support. This acted as resistance a bit here. Price came back into it, acted as what? Support. This acted as support right here. Price came back into it, acted as resistance. Resistance. This here, support, acted as resistance. Resistance. Then all of a sudden we had what? Resistance, resistance at every single point in time. Right? So if you missed that on the last class, go and watch out. Go and check our YouTube. It's on our YouTube. Okay, go and check our YouTube. It's on our YouTube. Do well to check the YouTube. It's on there. So we can also see the trend line we spoke about today. How I applied it to it. You see, every single student. That means this new student just got beaten. So I believe the student will run down before influencing people and breaking to the upside. Simple logic. Because what he retested the previous what support now turned resistance. Simple logic. So now that we are clear on the uptrend, we can see what happened right here again. We broke out and came to the downside. Now, let's check out the channels. The channels, okay? Let's check out the channels. So this is the supporting, and this is the what? The resisting channel. So what happened? We broke and started going to the downside. right? That's for the up channel. Lookman, drop your questions in the question section, okay? So looking at that channel, what happened? We broke out and came to the downside, then we started going down. You see how easy these breakouts occurs on the chart. Let's check again also using another channel to the downside. Can we all see this channel to the downside? Can we see how it's reacted? It's broke out. Okay, let me just adjust this. I'll use this to explain another concept in a few minutes. Can we see how it's broke out to the upside? So these things are very, very simple and they occur regularly on the chart. So are we clear with the concept of breakouts now? Are we clear with the concept of breakouts now? Yes or no before we proceed? Okay, just one yes. I need more yeses. Thank you. Yes, it serves as trend line. It serves as a supporting and resisting trend line. It serves as both. Okay, it serves as both. Okay. Okay, so are we all clear on the concept of breakouts, trend lines, and channels? Are we all clear on it? Okay, great. Everybody's saying a yes. So we can proceed. We can proceed now. We can proceed. We can proceed. Okay. Okay. Wait, I'm checking the questions. Seems that was a question. Now, what do you see before? Okay, I will do well to respond to all these questions when I'm done. Okay, just drop your questions. Just drop your questions. Drop your questions. Okay. Now, to the next thing, I'll stop sharing my screen and we'll move to the next thing, which is fake breakouts. Fake breakouts. Now, from the word fake breakouts, what do you think fake breakouts are? I'd love everybody responses in the chat box. Let me just cover what fake breakouts are. Let me cover it so we don't quickly get the answer from there. Okay, so yeah, what do we think fake breakouts are? Anybody at all? Your response in the chat box. What do we think fake breakouts are? Okay, I'd love everybody responses. Okay, somebody said manipulation. Fake breakouts are not manipulation. I'll clear everybody's ideology about that on this. Okay. I'm waiting for more responses. I want to know what you guys think fake breakouts are. Okay, so I'm waiting for okay, a lot of responses. So Tolu said manipulation. Fake breakouts are not manipulation. Okay, fake breakouts are not manipulation. Kelechi said a breakout followed by a retracement. What do you mean? Is it a retracement back into price or a retracement that continues in the direction of the breakout? That's what I need to know. Okay, a breakout then followed by a retracement. What type of retracement? Is it a retracement or price just jumped back into the area it broke out from and it continues trading the other direction it was trading, or it just breaks out and goes another direction? Okay, so that's for Kelechi right there. Uko says It thinks a sudden break and retraces back. Yes, it's a sudden break and it retraces, but to where? That's the question. Okay. Victor said trap move. Yes, you're very, very correct if you call it a trap move. But there's a difference between a trap move and manipulation. So Tolu, don't think I'm saying you're wrong. You're literally not saying the right thing. Okay. So Chuk said break of structure. No, Chuk is not really break of structure. I'm talking about fake breakout. Okay. Breakout reversed. Breakout reversed. How? Does it break out and continues going the new direction? Or you need to be more specific. Okay. Someone said false breakout or reacting and retraces almost immediately. To where? Let's be specific. Let's be specific. Okay. So back into price. Okay, Kelechi, I get what you're saying now. The price movement that is not formed into a trend. Okay. That doesn't form a new trend. Okay, great. I understand that. Chooks, I'm talking about fake breakouts. Okay, fake breakouts. Tokpe said trap liquidity. Market maker concepts. Yes, liquidity grab. You're correct on that. It reverses back into structure. Okay, everybody's coming clean now. Yes, back into previous direction. Forms a doji or a wavy line. Not all times false breakout forms dojis and wavy lines. Sometimes it just retraces back with an engulfing candle. It all depends on the situation in the market. Testing a new trend. Not really testing a new trend. Okay, Chicks, you're right on track on that. I'm getting everybody to talk. This is amazing. Okay, retesting the resistance line. Yes, it retests resistance, and sometimes the resistance fails, so you need to be more specific. Okay, so for everybody that gave a response to the question of what is a false breakout, thank you very much. Now let's do it my way. What is a false breakout? A false breakout is essentially a contrarian move in the market. Okay, it's a contrary move in the market that flushes out those traders who have entered based on emotion rather than logic and forward thinking. See, when a breakout happens, you don't just sell or buy. You need to wait. You need to wait for a reaction in price. What is that reaction? What? The retracement back to a significant area of structure, or you wait for a series of higher highs and higher lows, or lower highs and lower lows to form for you to know that, okay, this trend direction has changed before you enter. So in a nutshell, a fake breakout is just a breakout that failed to continue beyond a level, resulting in a false break of that level. Simple logic, simple stuff you could apply or you could see on the chart. Do we all understand? Okay, when price falls back into its normal area, correct? Now, let me explain false breakout using that student and teacher scenario again, okay? That student and teacher scenario. Now, I'll be using random names, so it's nobody's name. Remember, the students were lined up like this. Wow. Of what's rank? Wow. My bad. It's coming from my end. Okay, so let me just refresh my charts and a minute. Okay, we'll have the blank screen up again in a few minutes. So yeah, let's see this happen. Let's see this happen. So okay. Uh, it's from my end. So wow, it's still happening. So let me share a blank screen from here. Can you see a board, a white board? You can see a whiteboard. Brilliant. So I'm trying to use the whiteboard now. Okay. So I'm waiting for the tools to load appropriately so we can start using the board. Okay. So I've got a pen here. Can you see what I'm writing on the board? Can you see what I'm writing on the board? Can you see what I'm writing on the board? Like a black pen, a black ink on the board. Can you see it? So let's just ignore every other thing that we see on the board, okay? It's just a random board. So now let's quickly explain that concept of the teacher and the student. So he was flogging the students. They were going this way, this way. Then all of a sudden, one wants to run away. He doesn't want to get avoided. But this teacher said, you can't do this to me again this time. You ran away the other time. I will surely flog you this time. Then he catches the students and puts him back in line. Then flogs a lot of thing out of him, like flogs him a lot. Oh, you're not seeing anything. Okay, let me stop sharing the board then. Let me just share a screen. Let's see which screen I can share. Okay, so let's see if this works. Let's see if it start working. Okay, let's start working. So okay, a minute. Let me just. Can you see my screen now? If you can see my screen, drop something in the chat box. Thank you. Can you see my screen? Okay, great, great. So flogging the students, flogging the students, flogging the students. And there's this is the king. Then one student decided that I ran away the last time, I could do it again. Then he tries running away and the student catches him and puts him back in line. That's what a false breakout is. A false breakout is like an escape plan that failed. Okay? An escape plan that failed. An escape plan that failed. Do we understand? You see, we're trying to escape. Then we got an escape, but all of a sudden we got caught. Then we got put back in line. Do we understand? Do you understand from that angle? Okay, let me explain again. Let me explain again. So let's have this line right here. Okay, let's have this line right here. Then we were trying to take an escape. We've already been trying to escape, but we were not getting any. So then all of a sudden we got one opportunity to escape. Then the teacher came and said, what's wrong this time? It's not again. I don't know what's wrong with my wow. Okay, so you guys, do you understand? Because I'm seeing everybody saying yes. You now understand the concept behind the escape plan, right? Okay, so let me share a screen right now. Share screen and let's see it on the chat. Let's just see it on the chat. Now, I'm looking for somewhere where the escape was not successful and it got back in line with. Okay, so okay, right here, I found one already. Now I'll just put it in a box so everybody can see it. Okay, so what do we call this? We call this a what? A sideways channel, right? We call this a sideways channel or a ranging market, right? They all have the same characteristics. I take my trades on the 4-hour and the 1 hour mostly after analyzing on the daily time frame. So the thing is, everybody experiences fake breakout. Okay, everybody experiences fake breakout. But the thing is, always having a managed risk, okay? Always having a managed risk. Now, so what is being shared? Look at this. What do we call this? A failed escape or a failed breakout plan, right? And this is a failed breakout or a false breakout. Do we understand? This right here, above here, this is a false breakout, right? Because what happened immediately, price came back into the what? The sideways channel or the ranging market. Look down below also. You can see it happened 3 times. The false breakout, it happened 3 times. Then what happened? Before price changed direction and moved. Or even though if we still extended it in, we can see almost every time there was a false breakout. False breakout, false breakout, false breakout. Now, another example of a false breakout, I'll show you guys now. So now, what's the trend line? Okay. Look at this. This is a what? This right here. Sorry. Let me see if I can highlight that with an ellipse. Okay, look right here. Right here. That's a what? That's a false breakout, right? Because it's never traded below that. What happened immediately? It formed an engulfing candle, right? Immediately, right? It formed an engulfing candle immediately and it went back into the what? The area it was coming from. Do we all understand? Do we all understand now that that is a false or a fake breakout? If you've got questions, ask your questions in the chat box, okay? Ask your questions in the chat box if you've got any question at all. Ask your questions in the chat box. I mean, the question box, sorry. Now, if you just turn your phone upside down, you'll see the way it is in a downtrend. I can't flip my chart invertedly on this platform right here, but let's see if we can get one for a downtrend where a false breakout happened for a downtrend. Okay, so yeah, I think I found one already. So let's check. Yeah, so we can get a false breakout here. So this is a false breakout right here. Okay, right here. See right here. Did you see right there? That's a false breakout. Those two, yeah, right here, this two, right here, this two, that's a false breakout. What happened? Price came back and traded instantly back into it. Oh, you catch the, okay. Let me see if I could go back just because of you. So I said, when someone tries to run away from the teacher and the teacher catches the person, that is a false breakout. Okay? No, it's not the same as an overlap. It's never the same as an overlap. It's never the same as an overlap. An overlap is different from a false breakout. An overlap has the characteristics of what a real breakout is. Okay, it has the characteristics of what a real breakout is, but ends up not playing out. Okay, so those 2 weeks right there is a false breakout in a downtrend, and a lot of people would have fallen for the buy. Yeah, I'm currently on a short on ERGBP, so I'm shorting ERGBP, like I'm short on it. Right here. I sent out the analysis on my status. Yeah, I took a shot, right? Yeah, it's even playing out already. Let me check how much I'm off by. I'm up by 20 points already. 20 points. It's quite amazing how you can make money from the market sitting. I got in today, like during the early hours of the market, after the spike to the upside that cleared out retail traders. I got in. My TP is actually down below here. Let me share it with you. My take profit is down below here, like this area right here. So what I'll do is I'll trial my stop loss for a long period of time till it gets to this target. I'm comfortable holding my trades for a long period of time, so that's just it. Back to what we were discussing. So we've completed everything on breakouts, and let's go to chart patterns. Let's go to chart patterns, okay? Let me share my screen. So let's go to chart patterns. Now, these are chart patterns. What are chart patterns? Chart patterns are patterns that print out on your charts, like they are price patterns. They form over and over and over again. Okay, they are price patterns that form over and over again on the charts. Okay, these are like reactions from traders, and these patterns form over and over and over again. No, there's no need for you to know my lot size, but just know it to be hefty, though. Know it to be hefty. Okay, so chart patterns. Exactly, I'm targeting previous, let's just say previous, how would I put it, demand zone. Yes, previous demand zone, or previous one of those two, I guess. So looking at chart patterns are price patterns that prints on the chart. Like these are patterns that has a huge tendency of playing out. The one I texted you on WhatsApp with, that's the number I share ideas on. I shared gold also, gold buy. I'm also on gold. Let me see. I'm up by, let's check. I'm up by 50 points already. That's 50 pips already. So we're talking about chart patterns, okay? Chart patterns. I shared gold buy also. We're talking about chart patterns, and we've got different type of chart patterns. Okay, I will do well to text you with the number again. We've got different type of chart patterns. We've got the double bottom, double tops, triple top, triple bottom, head and shoulder, and rising and falling wedge. Now, the thing is, there are a lot of chart patterns. But these are the one I myself, I best believe these patterns occur over and over and over again, and what they have a high tendency of playing out effectively. Okay, they have a high tendency of playing out effectively, like they'll play out to the peak. That's why I stick to these chart patterns, okay? Because it's very, 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 very easy to identify on the chart, and also to take trades with. So I'll share a screen right now, and we'll talk about those chart patterns briefly, then conclude in our next class. So this was gold buy. Okay, sorry, the 1 hour. No, this isn't it. This isn't it at all. Okay, so taking my screen off. Yeah, GBP. This is not my chart. Okay, so okay, I feel my chart is inverted. I was looking at like that's not my chart, but yes, now we've gotten it out. So this is ERGB. I got the entry like around here, and this is gold. I got my buy around this week right here. So it's all good. I'm still holding the buy. It's a long-term buy. So yeah. Now back to what we were saying. Chart patterns. Now we said we have different type of chart patterns. Now I want everybody to write this down. We have the double bottom and double top. Double bottom and double top. We have the triple bottom and triple top. We have the head and shoulders and the inverted head and shoulder. We have the rising wedge and the falling wedge. Did we all get that down? Did we all get that down? If we did, please let me know so I can proceed. Okay, I'll mention it again. Double bottom and double top. Triple bottom and triple top. Head and shoulders and inverted head and shoulder. Then rising wedge and falling wedge. Okay, so there they are. Those are the important chart patterns I look out for. Now, when we talk about double bottom and double top, this is how they form. Price moves down. Comes back to the neckline before buying. Now, okay, so yeah. Now, this is the what? The first bottom. Sorry. This is the first bottom. Right here. And this is the second bottom. So when the two of them form, I expect a breakout of this area, right? A neckline. Then I get my entry here. Okay, I get my entry at the retest of the neckline for a buy, and that is how. Yes, exactly. A resistance turn to support, because this area was previous resistance. Price will come back to it. It will now turn to support. Then I'll look for my buy at this area. So I'll be looking for buying opportunities when I see a double bottom. Now, when I see a double top, support will turn to resistance. When price comes to the resistance, the support and resistance, I'll be looking for what? Selling opportunities. So I'll be looking for selling opportunities to the downside. So when you see a double bottom, you look for buys. When you see a double top, you look for sell. Are we clear on that? Are we clear on that? When we see a double bottom, we look for buys. When we see a double top, we look for sells. Are we clear on that? Let's do what to use the chat box. Let's do what to use the chat box, please. Thank you. So I just sent in a poll. Please let's respond to it. Okay, great. Now I'll teach you how to identify them on the chart. You've got nothing to worry about. Okay, we'll talk about how to identify these patterns on the chart. So let's go to how to identify these patterns on the chart. Now, all we need to do is to what? Look at where we are in price. We are in a downtrend. Do I want to be buying or be selling in a downtrend? The response is in the chat box. Do I want to buy in a downtrend or sell in a downtrend? Do I want to buy in a downtrend or sell in a downtrend? So in a downtrend, what will I be looking for? I'll be looking for selling opportunities, right? And selling opportunities, what chart pattern is a selling opportunity? Is it a double bottom or a double top? Double top, right? I want more responses. Double top, right? Now look at this. What do we have right here? First top, second top, right? The neckline, resistance. I mean, yes, support, now turn resistance. Then what happened? It went down. Do we all see? Do we all see how perfectly it's played out? Is it difficult? Is it difficult to spot? So you see, you could have made, let's check how much you could have made off this. Let's check. So let's say you took your trade here and you were targeting previous low. Well, I would not target previous low though, but let's say you were targeting previous low. You could have made 107 points off this. I knew I was in a downtrend. So I won't target previous low. All I would do is just to target break of every single structure. If price moves, I set my stop loss here. I'm in profit. If price breaks this low, I set my stop loss here. So I could still have been in this trade and be running about 242 points in profit. And using what they call tier rubber lot size, you know how much I could have made off it. You can spot it on any time frame. You can spot it on any time frame. You can spot it on the daily, on the 4 hour, on the 1 hour. But I advise to always use the daily and the 4 hour to spot chart patterns. Okay, the daily and the 4 hour. Anything after that, I don't advise. But the daily and the 4 hour, I advise to spot chart patterns. Okay, so now let's just flip it to the other side. What are we in? We are in an uptrend, right? We're in an uptrend. What do I want to look for? Buying opportunities. What chart pattern states a buying opportunities? Double bottom. What do I have here? Double bottom. I look for buying opportunities and see I'm still in the trade, running, and I'm still in profits. Very, very simple and easy to identify. Do we understand how to look out for double bottom and double tops now? I'd love to get more responses. Do we understand how to look out for double bottom and double tops now? Okay, Debbie, do you mind saying where I should go back to? Okay, tell me, where should I go back to so I can explain properly for you. Okay, so we said the double bottom is a chart pattern. Let me just hide all of this. So let's just leave that there. So we said the double bottom is a chart pattern where we'll be looking for what buying opportunities when we see a double bottom. Okay, so this is a double bottom. This is a double bottom. Now, when we see this chart pattern, we see this first bottom, then the second bottom. We'll be looking for what? Buying opportunities at the what? Resistance turn support. Okay. We're looking for buying opportunities at the resistance turn support. Now, this is resistance previously. It has turned support. I'll be looking for buying opportunities. And where do I look for double bottoms? I look for double bottoms in an uptrend. In an uptrend, okay? In an uptrend, I look for double bottoms. Now, what of double tops? When price is going in a downtrend, I look for double tops. I look for double tops because it's telling me like, okay, it's a continuation of the trend. The trend is strong. So what do? I use what? Support. When it turns into resistance, I take myself from there and I make money that way. Debbie, do you understand? Debbie, are you there? Do you understand? Great. Okay, so I can take that off my charts now and yeah. A minute. Don't take this off chart. Okay, so trend, right? So what will I be looking for? I'll be looking for selling opportunities, and look at what happened when we sold. In fact, the scale, and we have the what? The double bottom in an uptrend, or a double bottom in an uptrend. What do we look for? We look for buying opportunities, and what? We bought at the resistance turn support, and we are in the money. Do you understand, Debbie? Debbie, did you get the concept now? Okay, great. Now we can go to triple bottom and triple top. So triple bottom and triple top still have when we are talking about, and if you're talking about a triple top, it has to be 3, not 2. Okay, let's see if I can find the chart pattern on. Okay, okay. Let's see if we can find the triple top and a triple bottom. This is a triple top right here, but it's not really perfect. But let's check it out. So this is a downtrend. Then we had first top, second top, and third top. So let me point that out. First one, second one, then third one. Okay, can we all see that? First one, second one, third one. Can we all see the triple top? First one, second one, third one. Can we all see it? Great. So now, in that scenario, I'll be taking a short, like I'll be taking a sell opportunity right at this, because that's the neckline, that's the support turn resistance, and I take a short here. How much would I have made? I would have made 81 points. That's still good money when I use proper risk management. So let's see if we can get a triple. Okay, this is a triple bottom right here. And we understand that we are in what? We are in an uptrend right here. So triple bottom, and here we go. First bottom, second bottom, then third bottom. What happens? This is the neckline. Relevant one. So what do? I take a trade right here, and how much do I make? 155 points. 155 points. That's good money when you use good risk management. Okay, so yes, we're done explaining the concept of double top, double bottom, triple top, and triple bottom. Now let's go and look at the head and shoulder pattern. Let's explain the head and shoulder pattern. So what is the head and shoulder pattern? The head and shoulder pattern is a chart pattern, like every other chart, but it forms as shoulder, head, then shoulder. This is how it forms. So we call this the head and shoulder pattern. So it first form a left shoulder, a head, before forming the right shoulder, then breaking out of that support, now turning to resistance, then we take a short. That's how it forms. And also the same way it forms for an inverted. Okay, inverted, that means an head and shoulder upside down. That's how it forms, an inverted head and shoulder. Okay, so that's how it forms. Let's do well to go and look for it on a chart. Okay, let's see if we can find the head and shoulders pattern right here. Okay, there's one, we have one right here, but it's not very perfect, but I could still consider it the head and shoulders pattern. Okay, we have the left shoulder, the head, then the right shoulder. Then what happens? This was the resistance, right? Okay, this was the support, now turning resistance right here. So I take a sell right here, and I need to downtrend, so I continue trialing till it kicks me out around this area. So how much do I make? 214 points. Sweet 214 points, no stress. Okay, it's very, very easy to spot these things on the chart. Very, very easy to spot these things on the chart. Now, when I'm looking for an inverted head and shoulder, I'm looking for it in an uptrend. In an uptrend. Okay, there's 1 year, but not very, very perfect. Still looking for inverted head and shoulders. There's 1 year also, not very, very perfect. Okay. There's 1 year, but it's acted as a reversal. So let's take it. Okay. So this is the what? The left shoulder, the head, and the what? The right shoulder right here. So what do we have? We have right here. Okay, we have the break of the what? Resistance now turned into support. So I would have taken my trade here. Now, this is the very, very interesting part. Or this is where most traders make mistakes from. Now, the fact that I'm taking my trade here, my first target will be here. Okay, my first target will be here. That's 204 points. Now, when will my stop loss be? That's the question. This is the previous area of structure. So that's where my stop loss will be. Then my stop loss will be plus 20 pips. Like I told you guys the other time, plus 20. I at least add 20 pips to my stop loss. Like previous area where my stop loss is supposed to be. Then plus 20 pips. That will be like 83 pips to catch 206. Now that's a simple 1 to 2 risk to reward ratio. And look at what happened. Price came down like as if it wanted to kick me out of the trade, but it never kicked me out of the trade. I was still in the trade, and look at what happened immediately. We flew to the upside. Simple. Very, very simple. No, I said 20 pips. It's 20 pips. My stop loss is always 20 pips below my own, like my own personal preference. I've read it somewhere. They say 5 pips. I use 20 pips below because when price starts to find liquidity, it could go as far as 15 pips. So yes, and that's why I'm explaining the reason. Actually, I'm explaining the reason. When price goes searching for liquidity is your stop losses. It could go as far as 10 to 15 pips. So 20 pips is the max for me. 20 pips. Okay, 20 pips. And if it keeps me out of 20 pips, I know my trade or that trade idea has been invalidated. Okay, so that's just it. So that is how you trade an inverted head and shoulders pattern. Now let's go to the wedge. The wedge. Now, the wedge is a very, very simple pattern actually. Now, the rising wedge, you look for it in an uptrend. While the falling wedge, you look for it in a downtrend. Okay, so I'll explain the reasons now. Because of they are mostly what reversal patterns. Okay, they are mostly reversal patterns. Wedges are mostly reversal patterns. Okay, it's telling you that price will soon change direction fully. That's what wedges are telling you all about. Okay, so look at it here. Immediately price change direction. Then let's just take it to the downside. This is the down one in the downtrend. Price changes direction and pushes to the upside. So I would explain this using a trade I took yesterday, which was BTC. Okay, I'll explain it using the trade I took yesterday on BTC, Bitcoin. So I sold Bitcoin. Yes, sorry, I bought Bitcoin. Sorry, invert my skill back. I bought Bitcoin yesterday. This wedge, I saw it on the 4-hour time frame. Okay, on the 4-hour time frame. So look at what happened. Immediately it broke out. It went up into my take profit immediately. I made 3 out of that, 3 times my trading account. I made it off this. So imagine making 3 times of my trading account off this small trade. You could do the same. Now see this. This was okay. Let me explain from the 4-hour time frame. This was a downtrend. This was a downtrend. Right? This was a downtrend. And look at what happened. We saw this wedge pattern in a downtrend. Then I took this trade after it broke that structure right here, and immediately it went into profit. What is this telling me? This is telling me that direction or direction in price has changed, and I should be looking for longs, and that was why I took the buy on BTC yesterday. Also, if I wanted to take another buy on BTC right now, I could do it because of what? This is a wedge in an option. A wedge in an option is just telling you that price might continue to the upside. Like there's a huge tendency of price continuing to the upside. So you get now, this is a wedge in an option. So I can decide to take a buy right now. If I take a buy right now, let's check how much I'll be risking. If I take a buy at this spot right now, and I put it just 20 points below, so let's calculate. It should be somewhere around here. Then I target 3 times, which should be a previous area of structure, which is this right here. So I'll be targeting, my take profit will be like okay, let's see, yeah. Okay, so my take profit will be around 55 BTC, like $55,000 worth BTC, okay? Not $55,000 profit, but $55,000 worth BTC. But my first take profit will be at 52K, then 51K. Simple, very, very simple. So I can decide to take it right now, and I would take it just to, for clarity, BTC USD. Okay, so I believe everybody knows the MT4 sound, how MT4 sounds. So I think we had that sound, right? I just took BTC buy. My SL is not too small for me, okay? For me, most people prefer to increase their stop loss, but why risk more when I want to make more? So, okay, so I don't want to risk more. I just want to risk less so I can make more, okay? So that's what I did. And did you see how the wedge played out? And that's just a simple concept on wedge. So if I just turn it upside down to explain the uptrend scenario. So let's say this was in an uptrend. You see what happened? It dropped to the downside. Like it just went down. And this is another wedge right here. So we might expect it to push down further. I hope you grab. So that's how it's easily done. And that's how you treat a wedge. So this has brought us to the end of our session. I'll stop sharing my screen. This has brought us to the end of our session. I'll be answering every single question dropped in the chat box. So let's take it from Augustine's question. So Augustine said, does retest and retracement mean the same thing? Do they also mean the same as price correction? Now, let's explain it. Retest means price broke a previous area of structure and came back to test that area of structure before moving the direction it wants to go to. Now, retracement is when price is going in a downtrend. But remember, let's use this example to explain retracement. You can't run in one direction for long. Okay? You can't run in one direction for long. You need to take breaks. Now, in the financial market, price can't just continue going down. It needs to take break. So the break it takes is called retracement. Price pulls back, it slows down. So it doesn't run that much. When it slows down, it's going in an opposite direction before it gains more strength and dumps further. Now, when we say price is correcting, that means price has moved a certain amount and it needs to take back that amount. So let's say price has traded inefficiently, then it still needs to trade efficiently. Okay, so that's just what it means. So are we clear on that, Augustine? Now, Lukman said, I would like to raise the support. Yes, support and resistance are in your favor. They are always in your favor because they help you with almost everything in the financial market. They help you with profit targets. They help you with where to enter trade, where to exit trade, where to place your stop loss. Support and resistance is always in your favor in the market when you know how to apply them. Okay? Now, Sawyer said, what are the signals we see before a breakout occurs? Well, before a breakout occurs, what you see is price actually doesn't move fast or as much as it has been moving. Okay, so it loses momentum. Let's just put it that way. Price loses momentum when what? A breakout wants to occur. Okay, price loses momentum when a breakout wants to occur. So you don't see price moving as much as it has been moving before. You see it start moving slowly. Kelechi said, what trading platform is that? That's the cloud trade. That's the cloud trade platform. Okay. Copper said, what induces a fake out? A fake out is actually caused by traders that trade based off emotions. Okay, let's just say traders that trade based off emotions. Because of when you see a breakout, you need to wait first. You need to wait for price to give you a trigger that this breakout is real. But when you don't wait, price moves back in because of what they need to grab liquidity. They need to take stop losses. So you that you are not waiting, you are the liquidity, and they've taken you out, so they move on to the next thing. Kelechi said, is a false breakout the same as an overlap? No, it's not the same thing. It has never been the same thing. Kelechi asked also, what lot size did I use to trade? I use a lot size that is pertaining to my trading account. Thank you for that. Augustine said, what is the implication of time frame selection with respect to price behavior? What informed my choice of time frame? So I'm mostly a swing trader. I day trade for fun. Okay, I swing trade mostly, but I day trade for fun. Now, I swing trades, then I use the daily time frame, the 4 hour and the 1 hour to take my trades. When I want to day trade, I use the 1 hour time frame. Okay. When I want to swing, I analyze the daily, analyze the 4 hour, then place the trade on the 1 hour. My target is always on the daily. My stop loss is set on the 1 hour. Then, if I'm day trading, my target, my stop loss, my bias always comes from the 1 hour. So that's just it. And the BTC trade we took now is in profit. Sweet. Okay, which chart window? Sorry. Glory, can you please? Okay, is it on the Cloud Trade platform? If it's on Cloud Trade platform, please let me know so I can share my screen and walk you through on how to do that. Okay. Glory, is it on the Cloud Trade platform? If it's on the Cloud Trade platform, please let me know so I can walk you through on how you should do it. Glory. Okay, I think she's saying the Cloud Trade platform. So let me share my screen to my Cloud Trade. Okay, so let me just take this out and let me just. So I think this is it, right? So Glory, what I want to do is if I want to sell ERGBP, I just click on sell. I input 50, then I click on sell, and it brings this out. It has sold ERGBP for me. So if I want to see my trade, I come here, it loads everything, all my current trade. So these are my current trade. You can see most of them are in profit. This is the new ERGBP I opened because of Glory. So Glory, you see this pencil right here, you click on it, then you put your stop loss. So let's say my stop loss is 100 pips. I just put in 100 and it tells me I'll be losing 5,000 there. Then if my take profit is 200, I'll just put in 200 right there and tells me how much I'll be making. So it means I'll be losing 5,000 to make 10,000. I hope you grab. And that's just it in that way. And that's how you go about it. And you just click on submit and it sets it for you. Okay. So that's how I get it done, Glory. Oh, I didn't share that screen. Sorry. Let me share that screen. So Glory, what I said is you come back here, you see all your running trades. Like these are my running trades. You see everything right here. Then you click on this pencil. And that's the trade I just opened now because of the ERGBP sell again. I already have a running trade on it already. So let's say your stop loss is 100 points. You want to put 100 points as your stop loss. You just put it in 100. Then it tells you how much you'll be losing, which is 5,000 naira. Then your take profit, if it is 200, you put in 200 at your limit. Then you just click on submit. Then it submits and sets it for you. Okay? And that's how you know how much you'll be losing and how much you'll be making on a trade. Do you understand now, Glory? Great. So, have anybody got any further questions before we call it a day? Have you got further questions? Anybody else with questions? So, One more poll before we go. One more poll before we go. Okay, I just sent in a poll right now. Are you learning new things? Okay, so I changed the poll. Sorry, I changed the poll to have you learned new things. So another poll. I just sent another poll right now. Let's do well to respond to it. Thank you. You'll be trading after this webinar. Will you be trading after this webinar? Yes or no? So I just sent in 2 new polls. So please respond to it, okay? Yes, I can do well to start from that in our next class. So I will do well to start from that in our next class, okay? So let's do well to respond to the poll. Let's do well to respond to it. If you responded, you'll be funding your trading account after this webinar. Drop a message for me on WhatsApp. I'll reach out to you and possibly I'll give you a one-on-one Zoom session, okay? One-on-one session, we can talk about the markets, explain a few other things to you. That's if you'll be funding after this this webinar, okay? Just reach out to me on WhatsApp. The WhatsApp number is in the chat box. I'll drop it there again one more time so you can get the WhatsApp number there. Just text me on WhatsApp and yeah, you can start. It's in the chat box. It's in the chat box. Okay, it's in the chat box already. Okay, so we've come to the end of this webinar. Thank you guys for spending an hour and 43 minutes with me. Yes, the name's Chibuike. The name's Chibuike. Okay, so thank you very much, and we'll meet up on Thursday. Yes, on Thursday we'll meet up for another amazing session like this on Thursday. Thank you guys for your time. Thank you so much. Yes, the replay will be available on YouTube immediately after this, so you can check it out on YouTube. Okay, check it out on YouTube. It will be available on YouTube right after this. You're welcome. You're welcome. So do have a lovely day ahead of you and stay safe. Thank you.